Hello, this is Dave, and welcome to Equity Story for the Morning's Trade Watch. I'm here with Wolf, and this is just general trade advice and not personal advice, as per this beautiful disclaimer here. Wolf. Can we talk about, I think, maybe the most interesting, two interesting things that are one that's happening today, and one that's happened last night, Microsoft and Google.
Yes.
So both those stories, just to round it up, the market looks like, I think they're up a little bit after hours, but you're seeing the slowdown there, definitely in the numbers, Wolf, aren't you?
Yeah. Now you look, they've missed analyst expectations. So analysts, I think you called it like last week or something. You said that maybe the analysts are too bullish on some of these revenue numbers and bottom line numbers.
I have to be honest with you. I didn't call it. I was just listening to Rubini, one of the great commentators on the market, right? So as I steal ideas from you, I also steal ideas from Rubini.
Yeah, but look, it's understandable that I think when you look at it, majority of brokers are always going to be over optimistic, right? Because it's in their best interest to sell a story to their prospective clients, right? So I think that's a natural part of this cycle. However, when you see what happened last night, yep, they obviously missed some expectations from the brokers, but it wasn't a disaster, Dave. I think that's the key thing here. It was still pretty good. I mean, you look at the numbers and they're still growing. So Microsoft grew the top line at 14%, and I think Google was at 13%. So it's not as if they're collapsing their revenue numbers at all, which means they are still quality companies to an extent, and there'll be some interest in these companies at certain prices, right? For a investor out there, for long-term investor.
Yeah, and like you said, Wolf, they're still growing, and they're sort of stocks that you buy on a crash, right?
Correct, exactly, because it doesn't matter if there's a World War III. These probably companies will probably still sell the products, right?
But I think more interesting is that if these guys are finding it a little bit difficult, then the tier twos, tier threes below them could possibly get hit a lot more.
Yeah, absolutely.
Right. That's
100%. That is a good statement, that one. Yes.
Yeah. So that's why we've got to be very, very careful. Now, if suddenly the markets we start seeing a recession in America, and these P ratios start being readjusted, that's when you start getting a bigger pullback, Wolf, than what we've got so far. Yeah. And like we said, which is happening in about 3 weeks from now, according to my time schedule.
The question is though, right? Say for example, for a Google or a Microsoft, what is the market prepared to pay for these companies in this particular market? I mean, if you look at Google right now, they're trading on 19 times PE, and Microsoft is trading on 25 times PE, right? Historically, Microsoft traded all over the shop from the early days in the 2000s. They're about 10 times to the most recent terms, the last 5 years when they went to cloud business, right? They are trading on 20 times odd. So I'd be interested to see what the market prepares to pay for these sort of businesses in a recessionary market, in a possibly slowing down growth market. And, like you said to me at the beginning, could they drop back to 10? And I said, no. Can they drop to 15? I said, possibly. I'd probably be thinking if shit hits the fan, I'd say Microsoft probably could drop from 25 to 20 times. That's probably be my base case scenario, right? I'm always the optimist.
And then you'd be selling Natalie to buy some, right?
Yeah, well, yeah. If it drops to maybe 16, I'd probably sell Natalie. If it's 20, I'd probably go, yeah, okay, I might buy some.
Let's be honest. We haven't. Those of you who don't know what selling Natalie is, Wolf has said he will sell his girlfriend Natalie if certain stocks get down to certain prices. Now, we haven't quite seen that yet.
No.
Natalie's so far been fairly lucky, hasn't she? Really.
She's avoided the sales pretty well, navigated through it beautifully.
She has. But I think Natalie could get sold if Microsoft. If you look at if Microsoft came down to maybe 200.
I think if it goes down 150. Because that's 150, that would put it under 20 times, right? That's where you'd go, all right, I might be selling Natalie. So it's still $100 a long way. I mean, look at it. If you look at Microsoft, it's still way above before the pandemic started.
And Google
similar, while the prices have come off like 30%, like, we talked about just a little bit earlier, the actual prices went up 100% during the last 2 years. So there's still a long way to go. However, at least from a fundamental point of view, these companies are not going to go bankrupt, right? They are still, looks like they're still growing okay-ish in this market.
Well, also, Wolf, like I said, they're great storages of wealth, aren't they? I mean,
Right.
if you're going to store your money for 10 years somewhere, Microsoft, Google, Amazon, Apple.
Yep.
I think we kicked out Meta, haven't we, from that sort of idea?
Yeah, that day's gone.
But I mean, those four, you'd be having a look at them. All right. Okay. So very, very interesting, Wolf. And then today at 11:30, we've got some news coming out.
Yeah, CPI numbers. So we'll see where we're at with inflation, right? And if its numbers are obviously terrible, then we're possibly going to see next week a bigger jump than expected in the cash rates. So let's see what the numbers are. I'm expecting obviously some pretty decent big numbers CPI wise, but will they show that maybe the underlying inflation peaked or not? Well, this is going to be the interesting part at 11:30 to see what actually has happened. All
right. Well, thank you very much for that. Now we're going to start today off with two stories, which we think one's a buy and one is a buy on any weakness, because they've put announcements out today. Those announcements have been very strong. And the first one we're going to start off with is ALC. Now, obviously, it's not in the Cincinnati method at the moment, but what we did see the other week was, and this is why we put it as a hot stock, possibly a contrarian play and a bit of a recovery. And I must say, Wolf, it's jumping over. I think you got to pay 15 cents for it now. It's jumped over that 14, which was a little bit of resistance before. That short-term chart is looking very, very good. So technically better than maybe even a few weeks ago, and you'd possibly be if it ended at 14.5 by the end of trade today, you'd be having a look at this. It's actually I think just jumping up right now as we're talking. But what did you make of the announcement?
Fantastic, Dave. I mean, in a market like this, we're trying to pick those stories that could deliver a good result. I think ALC did that. They delivered a very, very good result. Cash flow positive, which is, this market, what a load of relief, especially for a hot stock. Because if they went in the other way, they probably would have been back to 10 cents again.
It could have been a cold stock.
That's right, exactly right. But overall, what a good little company. It's fulfilling a brilliant, a great service, a niche, growing, winning new contracts, big and small. They are talking about a nice setup for 2023. Talking again, profitability in 2023. I'm liking this all around. Market cap 170 million. It's not too demanding. On revenues over 30 mil now. You'd think to yourself, well, paying what, 5 times, maybe 6 times for this. It's okay. I'm happy to accumulate these, on this numbers, 14.5, between 14.5, 13, I'm buying this for the long term.
And Wolf, like, hospitals are busier than they've ever been.
Exactly. The beauty about it is they are starting to win more, I suppose, the nicer contracts, right? Like the Alfred Health and so on. So for me, that's the exciting bit. That possibly it's getting better name out there, and more people are looking at this.
So the general feeling is, if you didn't buy this hot stock a few weeks ago, it's still good for a buy.
Yeah, absolutely. I don't think it's run ahead. So you think to yourself, it's still a great opportunity.
Wolf, Matter Group, which actually, it gave us a lovely, lovely buy signal on the weekend. So the people in the know were buying, definitely, and I think they knew the story.
Yep.
Unfortunately, what it does get annoying, those people in the know that were buying are taking a profit today. Otherwise, I think Matter Group would have run up a little bit harder. And just having a look here, North America is absolutely booming for them.
Yeah, look at that, 149%, right? Rise in sales, and total revenue up from 86.4 to 118.7. This is a quarterly, right? So that's up 37%. EBITDA up 31%. Net debt steady, which is nice. So all up, I think they're talking about full year results delivery of this quarter takes FY revenue of 402 million, exceeding previous market guidance of revenue of at least 370 million, representing year-on-year revenue growth of 32%, right? That's fantastic. And the beautiful thing about it, Dave, is a lot of this North American segment is growing organically, right? So they're going into Canada, pretty much starting from zero, from scratch, and look at the growth. You've got to love this. So any weakness, don't worry about the insiders, right? They've had their go now. They bought it, they sold it. If there's any weakness in here, you're buying this.
Very good. They do have a bit of debt on the books, Wolf, don't they?
Yeah, 25 million is not. I don't think it's too demanding.
Okay.
And it's like I said, it's not a bad thing. A little bit of debt gives you a bit more leverage to grow a company. So I don't mind as long as you get cash flows to pay for the servicing of the debt. This is where it's okay. It's if you're a startup when you've got no money and you've got debt, that's where I struggle to understand why you've got debt.
All right, Wolf. I'm just having a look. I mean, yeah, it's had that move. There seems to be a little bit of resistance at 3.
Yep.
Sort of buy on weakness near the trend line. Yeah.
Yeah. So what when I say okay, so you say buy on weakness. So where would you be buying this? Around the 250 mark? 260?
Well, I think you know what, Wolf. Definitely, I think we've accepted the fact these markets are going to sell off. Yeah.
Yep.
When they do, there'll be an opportunity to get into this story, and I think we just got to see where it lies. Where would you? I would argue that something like ALC, more confident to buy it because I think it's going to be. If the market does sell off, I think you could see something like ALC being a little bit more of its health, a little bit more maybe a safer play than something like
more resilient.
More resilient. Where Matter Group could be affected with a slowdown in America.
Look, I think yeah, you can make an argument that maybe with Matter Group, right, it might be more volatile due to the fact that it is not just Australian based; it's US based as well. Two jurisdiction could be two different speeds of economies, right, going through. So yeah, it could be more volatile. I agree with that. But then of course it's got the positive, which is actually profitable, right? So you can go, well, fundamentally, probably the stronger story was Matter Group, but I still love, both for different reasons. But I can see your argument. I can agree with that. You're saying that ALC maybe because it's come off so far, right, and it's still fairly low. Like Matter Group is trading up there. I'd see definitely maybe a little bit more safety in ALC, strangely enough.
Yeah, it's funny enough. Seeing a little bit of it's about 947 pounds to get taken out, but the chart's looking, it's even up as we're talking, Wolf. It looks very, very good, doesn't it?
Yeah, look, let me tell you that probably the fund will be buying some more of these too.
Okay. Westpac.
Yes.
Just look on the daily. It's not looking terrible, but let's have a look at the weekly. So, yeah, it just looks boring, doesn't it? Oh my, this doesn't look exciting at all, Wolf. I wouldn't be, it's only a dividend play. That's it, right?
Oh, Dave, you're already boring me with WCB talk. Oh,
all right. Can we not talk about
something else?
Well, I have to be nice to them. We do bank with them.
Oh, do you? Okay, fair enough. Let me just at least give them a little bit of a wrap. Let's see what the dividend is like on WBC.
I'll tell you what they do have. They've got lovely masks there with Westpac on them.
Okay, I tell you why I don't like Westpac, and especially probably older banks these days, right? Where you go into a branch, and I've been helping my mum recently before she went to Poland, and she banks with Westpac. If you want to do anything, you've got to make an appointment, and you have to come back again.
I know it drives you.
What is going on with these banks? It's a service, and
I know
doing them a favor.
It drives you up. Anyway, I did enjoy it I must be honest, over lockdown, I did have that. I did manage to go into a bank with a mask on my face. I always dreamed about that.
Yeah.
I walked up to the counter and I just had the mask and I just wanted to say, hand me your money now.
Oh God.
But
lucky you didn't say that because there would have been police all over you.
Yeah, I know. But I always, I watched all those Jesse James movies and Westerns and I loved when they used to go in the bank on the horse with I just needed to be on a horse, Wolf, with my mask, and I would have loved every moment of it.
Let me just get this thing out of my mind. Okay, let's go. Next one.
FME.
Yes.
More drill results, but Real drill results or?
Look, I think they've gone through and had a look through some historicals. They had do some interpretations of some geological data. So really nothing there that you'd go, okay, well, this is real stuff. They still have to actually drill it and come up with some assay results for us to get, because they're talking about, yes, it looks great, but come on, guys, let's actually see the results before we're talking about great.
They are finding a lot of stuff in the cupboard, though.
Yeah, I know. It's pretty good. There must be a good shit out there where
I don't know where this
go
cupboard
into the data and reinterpreting the data and marry the data. It's pretty good, isn't it?
Listen, the guys behind FME are good friends of mine. I really want this business to do well, Wolf, and
Fair enough.
I've got to be careful I'm not biased on it, because I do obviously. But you know what? You look at the potential there, right? If they can get some bloody good drill results, anything's possible with this.
Dave, look, they've got a project already, right? And it looks undervalued. I mean, I can't dispute that. But will the market ever fall in love with it? I mean, that's the question here. And for it to probably get back to 25 cents again, they need to come up with something more than just reinterpreting results.
Yeah, I mean, well, maybe they will. Hopefully they will.
Oh, I'm sure they will. I mean, that's the thing. I'm sure they're going to drill and then
Wolfie, when you look at the people behind it, the people behind this are behind a lot of successful stuff. I mean, anyway.
Yeah, so you'd expect that eventually this will recover and go back up again, but at the moment that sort of announcement just doesn't cut it in this market.
No, I know what you're saying. All right, NTD. I think we all changed our tires, didn't we, in that wet weather that we had for about 6 months of non-stop rain. So maybe they're slowing down a little bit at the moment.
Yep.
But again, if you look at that chart, you're actually running away from that story, Wolf, to be honest. I know they do pay good dividend, but that price action looks terrible.
Yeah, no, not for me.
Wolf, BTH. So it's having a little bit of recovery, and we had a question asked the analyst last night, and had a nice little buy signal, and a good announcement today.
Yeah, look, it looks like they've sort of doing okay. That's a tier 2, right? It's a company where they've got revenue growth and I think cash flow positivity. Let me just double check that. Hang on. BDH. And apologies if you can hear the dog in the background. It's going off a little bit. Let me have a quick
You need to let it out, Wolf.
Not sure. I have to see if she's making noises because Natalie's gone away for a moment. But if you give me a moment, I'll have a quick look at BDH for you, and I'll just have a look to see, making sure. Maybe I'll open the door for her. Coming here. Hang on. Fifi.
Oh, they always say, don't work with children and animals.
Yeah, I know. All right, so I'm looking at customer receipts of 31 million, which looks decent, right? But I'm going to have a look at the actual cash flows to see which tier they fall into. All right, so all right, we've got 31 million in customer receipts and $49. Is that right? $49,000 positive cash flows. I mean, they just made it into tier 2, right? Otherwise, there would be tier 3. But no, is it my favorite company? No, and especially when you look at it, Dave, 106 million in customer receipts and a negative cash flow overall in 12 months. I mean, really? So in other words, the staff costs is about 85 million in staff costs, 17 million in administration corporate, 18 million in administration. What have got like Trump Tower or something as the base? I mean, I don't understand why there's such high administration and corporate costs. What is going on with this company? So that's the question I probably have to ask, because the costs for the number of customer receipts to have a negative cash flow is something's not quite right here for me.
Okay, you know what? Well, you're only buying this off the daily, which is just scary. If you're in this very tight stop, we'll take a profit.
Okay, sounds good.
Right, DVP. I know you've got a lot of faith in this story, Wolf.
I do have a lot of faith in building.
Obviously, the price action is not there on these charts. How did they announce?
Well, look, it was just an update. They don't have any cash flows, as so to speak, as yet. The proper stuff, right? They've had a contract being a mining contractor now, plus a exploration and a developer of a mine or two. There's a lot of excitement for the future though, right? So for me, they've got this $400 million contract with Bellevue Gold, which is excellent. So there's going to be a lot of cash flows coming through there, which I'd say I'm trying to get into Bill Bain's mind. And I'm thinking that he's going to use that cash flows to fund his exploration and development of projects, because he bought Woodlawn as well, another project here in Australia out of the administrator's hands, by the looks of things. So look, he's a super astute guy, and I still believe that he's going to turn this into $1 billion company, right? So watch this space. Maybe right now you probably want to see a better, of course, chart, and maybe cash flows to boot. So maybe we're 6 to 12 months early on this, Dave. But you've got to like what he's probably going to try to do here.
All right, so just watch out. There'll be the charts will tell us when to buy. IGO Wolf, it's had a bit of a sell-off recently. Found a little bit of support, bouncing back. Technically hasn't done enough. Fundamentally,
good results. I mean, they've held the costs in check. They had a good production numbers. So for me, and the plus, remember, they are in that only commodity is still very hot, and that is lithium. So all around, pretty good. All
right. So again, just watch it. The charts will tell us when to buy it. ASN, Anson Resources. Now, Tim likes this story. It's trending up quite nicely. Fairly good announcement today, Wolf. But just very early days, isn't it? That's the issue. It's very early days. It's not a big market cap.
I have to apologize. It's out of my jurisdiction, right? Like I said yesterday on the ATA, it's just I don't quite come across the brine lithium project. So, for me to fully understand it, I'd probably have to do some studies on this. But generally speaking, we just trend these things anyway. So use the charts.
It could work out a little bit more, but certainly under 11, you get out. Yeah. BRN, brain chip. It's holding up all right. I mean, it's there's so many people that just love the story, Wolf. I think even if this company is tier 5 and is losing hundreds of millions, they'll all be cheering it and buying it up. And
tier 5 is the dog of the dogs. I don't think there's anything in there at the moment, but look, tier 4 for me, BRN at this stage. And look, eventually maybe they'll come up with lots of cash flows and so on. But for now, it's still tier 4, still a great story, but nothing to show for it as yet.
Well, for obviously SES, which was a great winner for us, this stock, been heavily sold off.
Yep.
Trying to look about having a recovery, and I'm not seeing any recovery on the charts. No. But how was the announcement today?
Yeah, it was okay. It wasn't fantastic. The quarterly wasn't as good as previous ones, right? So from that point of view, a little bit disappointing. But they flagged it that there's going to be FY20. They're setting themselves up for FY23. So let's see. And I expect good growth in FY23, and I expect maybe better performance on the bottom line. They still come up with a positive cash flow quarterly, right? So it's definitely not a disaster. It's actually not bad, like I said. But I can see why the market's sort of like reluctant to buy it at the moment. They're probably going to go, okay, well, let's wait for another quarter and see where they are at.
Right. And lastly but not least, totally, obviously, technically it's not there, but Wolf, you're calling ALU a sell. Tell us why, because this is a story that you've often quite liked in the past. So I'm really interested in finding out why are we going to sell this one, Mr. Wolf?
Look, I have to be frank with everyone. I'm just looking through FN Arena. I'm looking at Macquarie's update because I don't have access to its peers and all its numbers and so on. And basically what they're saying, and that spooked me and probably thinking, okay, well, maybe you should not be punting this at the moment because it could come up with some similar type of results. And I'll tell you what Macquarie says, right? So we're going to use the update and saying there's a close correlation with Altium's boards and systems revenue growth to international peers, and their quarterly, so the peers quarterlies reports have shown negative growth. Right, that's pretty strong language to me. Means red flag. Maybe you don't want to take the punt on an update from Altium, right? Look, they could surprise on the upside and say we're different from our peers. We're going much better. Yes, that's a possibility. But when you see that sort of commentary, if you think, oh, do you want to take the risk? And I'd probably say for myself, no.
All right. On that note, if you've got Altium, sell it. And
Yeah.
Wolfie, thank you very much for.
Don't have any.
And anyway, thank you very much, Wolf. We do have a buy on ALC today, and a buy on MAD if we get a bit of a pullback. And thank you very much, Wolfie.
All right. Cheers, guys.
Take care. Bye bye.